Hello, you guys. Welcome to lesson 4. In this lesson, we'll be discussing the problem with traditional savings and banking accounts, right? So we'll cover things like why you're at a disadvantage by operating under their traditional savings accounts and why the banks typically focus on larger accounts and leave the little guys at a disadvantage. So let's talk about inflation. Inflation has been eating your wealth alive. Our parents, our grandparents, they saved, they have mattress money, right? They stored most of their money in the mattress because they didn't trust the banks, right? And they were right. They didn't trust the banks because the banks were not lending to them. The banks were keeping their money from them when they tried to pull their money out. They experienced things like the Great Depression, right? So they saw how banks move in times of turmoil. Inflation comes when banks are not using their powers appropriately. And banks start to print more and more money and to over leverage what we give them to work with. If we're storing our wealth in this thing that they constantly print out, we're actually doing ourselves a major disservice. But like with most things in life, there's two sides of every coin. So as intelligent investors, as I said in the beginning of this course, our objective is to acquire as many assets as possible, right? So when our assets are valued as a representative or as a representation or pegged to the US dollar, inflation works in our benefit. So if we have assets already and they constantly print more money, what does that mean for our assets? That means our assets increase in value, our assets increase in price. So knowledge is power, right? Because you may not have known that inflation is eating away your wealth, right? Or maybe you did understand that inflation was eating away your wealth, but you may not have known that if you simply transfer your wealth into assets, you can balance that out and actually turn a losing situation into an amazing situation where you win exponentially, especially with something like Bitcoin. So sometimes it's difficult to see inflation in action and how it actually affects us, right? Because I can say you're losing dollar power, you're losing spending power over the next 10 years, and you're losing 3% of value every year. But what does that mean? What does that translate to? I can give you 2 examples. I guarantee when you were younger, a gallon of milk cost much less than it was today. I think back in the day, I think we could get a gallon of milk for like $1.99, right? Now that same gallon of milk costs $5.99. And it's not that milk has become more scarce, but the issue is the dollar is depreciating. So things that cost money are costing more of those dollars because they have less value. Another example that may hit home for a few of you guys is the cannabis industry. Since 2020 started and the Fed started to print more and more money, we've seen the price of cannabis increase. We've seen it increase significantly to the point where you're almost paying double what you used to pay for the same quantity of cannabis. So if that doesn't show you that inflation is horrible for your wealth, I don't know what else will. So the next major problem with operating in the traditional banking system and allowing banks to control your entire financial situation is that banks are no longer catering to you. Banks are catering to their large institutional clients. They have no desire to cater to you. Their only desire for you is to get your money in so that they can multiply it, so that they can trade, so that they can invest, and so that they can pay their shareholders, right? Their bottom line, their number one priority is their shareholders, not you. In fact, you're the product and not the customer. I want to make that very clear. We as retail investors are no longer the customer or the client of the bank. We've been converted into the products of the bank. The last really important problem that the banks present to us, as we've mentioned in earlier lessons, is opportunity costs. The opportunity cost or the opportunity that we lose by giving our money or trusting the banks with our money is astronomical, right? The banks have not been a consistent factor in building wealth. In fact, they've been limiting us. So if we look at other opportunities, we can see that there's much more upside potential and opportunities outside of our traditional banking system. A lot of us have started to trade stocks and to understand the value of holding a stock portfolio. A lot of us have started to understand the value of real estate and storing our money in real estate outside of the bank. A lot of us have more recently turned to Bitcoin and understand that holding Bitcoin is a way to accelerate your wealth generation. And I know a lot of people talk about volatility of Bitcoin, but a really interesting fact is if you look at anyone who has consistently held Bitcoin for 3 years or more is in profit. There's 0 people who are at a loss from holding Bitcoin for 3+ years. So that's very important to keep in mind. So that's wrapping up lesson 4, the problems with banking and things that you need to be aware of so that you know that you need to make some type of adjustment if your goal is to build generational wealth and to create your own banking system that you can then use as a launch pad to invest in different projects, start different businesses, or cover different emergency expenses in ways that you've never been able to do before. I'll see you in the next video.